Hey, what's up guys? Welcome back to Aimstone channel. Today I have very exciting guest, Sam Callahan. He is a leading market analyst at Swan Bitcoin and a host at Swan Signal podcast. He spends most of his time with Swan Private team educating high net worth individuals, financial advisors, and businesses about Bitcoin. Today we will discuss economy, inflation, CBDCs, Bitcoin spot ETFs, and many other topics. Let's go. Sam, how you doing?
Good, Andre. Really excited to talk with you today.
Yeah, likewise. I was actually very excited for this conversation. I have been following your Twitter account, your work for quite some time, especially listening to your podcast with Preston Peach and at Swan. So maybe let's start this conversation with economy. As you know that today actually Q4 GDP numbers were released for 2023. I think it came up like 3.3%, which is higher than expected. The expectation was 2%, as well as inflation is at, I think, 3.4% for December. So it seems like Fed at least make it like wants to make it look like they are winning this inflation war. What do you think?
Well, I think they might be premature in that victory on inflation, which would be very on point for them. You know, the Federal Reserve, if you just look at the 1970s, there was a lot of premature celebrations that inflation was over only for it to rally back because of structural reasons. And I think we're in for similar dynamics right now. When you look at what I mean by structural, I'm talking about kind of like deglobalization, for instance. You know, we have a breakdown in trade relations, more rising tensions, more wars broken out, and you see that with like maybe the freight rates recently when there's been attacks in the Red Sea. That attack affects shipping routes. It affects the trade routes. It affects the supply chains, which means less goods being delivered less efficiently, which is inflationary in nature. And if you look at that trend specifically, I mean, you see that going one way. You don't see everyone like shaking hands and getting more cozy with each other. You actually see more tensions developing between China and the United States, even between Europe and the United States. Obviously, there's Russia. And then there's the war in the Middle East, all kind of contributing to reduced efficiencies in supply chains. And then you have things like demographics. You have a really tight labor market, which is inflationary. And then you have the fiscal situation where they just keep spending money. It's easy to have large GDP prints when they're running deficits that haven't been seen really since the pandemic. I mean, already this year we're on pace to have a deficit as large as 2020 and 2021 with unemployment rate at multi-decade lows. They're still printing like or spending like drunken sailors at the Treasury. And so that is inflationary. And so I think if they continue to spend and we can continue to see constraints on the supply side, we continue to see a tight labor market, then inflation's not going to go back down to that 2% level. In fact, it's likely to accelerate, I think, into 2023. And so that's kind of my overview. I think you should expect a hot economy when they're spending that the way they are. And you just see that there's still consumer strength and people are still seeing their incomes rise, and that gives them power to spend, which isn't a good thing for the inflation picture. So obviously the Fed wants to see demand get crushed, but we're not really seeing substantial evidence of that. And so I think inflation is going to stick around at least and maybe even rise in the coming 12 months.
Right, especially if you go to like groceries, you can see like every single item is more expensive than it was a few years ago. But
Yeah.
as we can see that CPI, like at least official CPI numbers, they drop from like 9% to like 3.4%. But some people think that when inflation drops, it means that prices will drop, but this is not necessarily the case. Like inflation drops, it means that the rate of increasing is slower, but it still increases. But uh,
Yeah.
so, yeah, so what do you think is the solution here? Like, what do you think is going to happen next?
Well, the solution would be for them to stop spending money that they don't have, stop going into debt. But you know, that doesn't get anybody elected. You know, these politicians are so short-term thinking. That is the solution. Would be austerity measures, but they're not going to do that, right? Now, you bring up a great point. Is that CPI measures the rate of change. When the CPI goes down, it just means that you know, your purchasing power is being eroded at a slower rate than before, but prices are still going up. And if you look at the absolute price levels, they're up about 20% since pre-pandemic in terms of food, gasoline, rent costs. Americans and really people all over the world are feeling it. And when the politicians are saying we beat inflation, they're looking around like, what are you talking about? Like things feel extremely expensive. And inflation's interesting because CPI is only one measure of inflation. There's other ways to look at inflation as well. One is inflation in financial assets. We still have the stock market hitting all-time highs right now. We still have real estate prices still really high. And why that's inflationary is because it's that the wealth effect. So like people hold those assets, they feel more wealthy when they look at their 401ks and they see it's way up, and they look at their house prices and it's way up. They're more likely to borrow, they're more likely to spend. That's inflationary. So you have inflation in financial asset prices, and that's really as a result of a decade of low interest rate policy and artificially keeping interest rates low. And obviously the huge QE programs we saw out of the pandemic. But then you also have monetary inflation, which is the expansion of the M2 money supply. And people will look at the M2 money supply and they'll say it's down on a year over year basis because it's crashed as they kind of pump the brakes on a lot of these programs. But if you look at the absolute level of how large M2 money supply grew out of the pandemic, it's still extremely elevated. There's just so much money sloshing around, even if they've cut it off over the last year and a half. There is still, just from an absolute standpoint, if you look at M2 money supply, it is ballooned from the pre-pandemic levels. And so there's different types of inflation. There's the rate of goods and services, like the CPI. There's financial asset inflation, and there's monetary inflation. You have to take into account all three, I think, to get an overall picture. Yeah, and I know I'm talking a lot, but one of the last thing I'll say is that inflation is individual. Like it's a vector, so it's like my inflation is different than your inflation, and they can say that like the CPI is dropping to 3%, but I know that my inflation rate, what I spend my money on every month, it's well above that, and I think a lot of people will look around and say like that CPI basket, whatever they stick into that. That's not my basket, and my inflation rate is much higher. So don't believe what you hear, believe what you feel, believe your eyes, because you're not wrong. The data is just manipulated, and the data is wrong, and it doesn't adhere to your personal circumstances.
Right. Yeah, I like to eat steak, and steak is very expensive. But moving back to M2 money supply. If I remember correctly, I think M2 money supply annual compound growth rate from 1960s until now was around like 7% per annum, and stock market also like increase like compound rate approximately 7% per annum. Do you think it's like a coincidence that both of them increase equally?
No, I don't. I think they're directly related. I think this is all a liquidity game. And you bring up a great point, because like people say that, well, you should invest in the stock market for long-term, wealth appreciation. But really, if you look at his history, and if you look at, say, the M2 money supply growth and say, that is a appropriate measure of inflation, then really your stock market gains have just kept up with inflation, or the rate of debasement, or however we call it, the rate that your money's been losing purchasing power, your stock market has kept up with it, but it hasn't beaten it. And I think that's where, you talked about what's the solution here. And I said, stopping spending, but it's also, removing their ability to spend entirely. So like a money that can't be inflated away, that can't be controlled, storing your wealth in something like that would be a solution at the individual level, to protect yourself from these politicians who continue to spend. And so I think, Bitcoin has the ability, due to its inherent properties, like its absolute scarcity, its decentralization, to protect yourself against the rate of the M2 money supply growth and actually beat that rate, as opposed to the stock market, who has just kept up with it. And that's really, if you look at the compound annual growth rate of Bitcoin, it crushes the S&P 500, it crushes gold, it crushes anything. And even if you're like, I'm not even cherry picking data, if you go back like 5 years, so that includes like 2 bear markets, even if you include those large drawdown years, Bitcoin's compounded annual growth rate is still extremely impressive. I don't have the number off the top of my head.
150%, something like that.
Yeah, actually, let me actually just look it up. It might be helpful just to have that number on here.
150%, I think, annual compound rate.
over the last 5 years.
Oh, over since Bitcoin went in the market. Oh, you
Yeah, so
wanna?
like I don't like to go like that far back because
Oh,
I feel
okay.
like it's a little cherry picking because obviously Bitcoin didn't even have a price. I don't know why
Right.
this isn't loading right now. That's annoying. Hold on, here we go. I got it right here. So like this is just the return on investment. This isn't the compound annual growth rate, but over 5 years it's up 1,000%, whereas gold's up 57 and S&P 500's up 83.
Bitcoin
So
up. Yeah, yeah, that makes sense. There's like 11,000.
yeah, so like I mean that's like the 5 year. From a 4 year, Bitcoin's up 355%, gold's up 28, S&P 500's up
Yeah,
51.
Bitcoin went up from like 4K all the way to like forty thousand
Right.
dollars this current price. So it's like
Yeah,
10x.
yeah. Anyway, you get what I'm saying? Is that like
Yeah, of course.
it can out perform the rate of the M2 money supply growth better than say stocks or gold. So it makes a lot of sense to own a portion of it. I'm not saying you have to go all in or anything like crazy like that. It's just even a small amount of Bitcoin goes a really long way due to its asymmetric upside and its potential to appreciate as it continues to get adopted in the coming years.
Yeah, I'm all in, not coming back. But anyway, Sam, let's move on to CBDCs. Yeah, I read a lot of articles recently in the past maybe 2 3 years about CBDCs. And what do you think about CBDC, and are they good or bad for like humanity?
Oh well, I think they're really bad. I think they're really bad because they can be used as a tool of oppression and surveillance, and that's probably likely what they will be used for. I mean, basically, just imagine a technology where a small group of people would have immense power and control to manipulate the money, first off, to debase the currency. But at the same time, they could actually program the money itself to have smart contract functionality, which means like if and then statements. So like if the person lives in this county and voted for this person and is, Democrat leaning, Republican leaning, and this and that, they can receive the stimulus check. Or if this person was at this protest, they can't spend money for the next 8 hours because a dumpster got lit on fire. One of the concerning ones was like when I read the comment sections of some of these public statements of some of the builders of these CBDCs, some of the technology companies actually building the backends, they said, well, what we can do, what's interesting about programmable money is say if somebody has a mental health issue, we can restrict when they can spend their money based on the time of day. And the idea, I don't know if they have well intentions or not, but they're saying like, yeah, if they're bipolar or something and they really get manic at night, we can basically control when they can spend their money. But that the ability for anybody to be able to shut off the money like that for any reason is extremely concerning. And it's easy to see how an authoritarian government could abuse that power. And immediately you think about, well, who's considered mentally ill? Like who's making that call? Like am I mentally ill because I disagree with their authoritarian policies and I'm protesting? Are they going to deem me mentally ill and then shut off my money for a couple days? And it's really not absurd to think that through and just say like, this is a bad idea. And on top of that, it's just the same inflationary monetary policies wrapped in a surveillance wrapper of new technology. And, it just, I could go on and on and on, and we can break into why CBDCs are a bad idea. I just touched on more of like the human right infringements of privacy, as well as how this could be used as a tool of oppression. But there's actually like a lot of other concerns when it comes to introducing a CBDC, like in terms of actually making financial payments less efficient and expensive, in terms of creating financial instability and disintermediating the entire banking system and causing a banking crisis by introducing a CBDC. There's cybersecurity risks of hackers hacking the money of the government itself. There's adoption risks of just wasting so much taxpayer money to try to bring this thing out and nobody freaking wants it. And then what did you just do? You just printed this money, basically that has to go on the central bank's balance sheet. So you just expanded the balance sheet even more with this new form of digital money that nobody even wants, and you just wasted a ton of money and resources and time building it out. And then you could also crowd out the private sector technology and innovation. Like, what they really are worried about is like fintechs and Bitcoin and stable coins all taking power away from the central banks, because they basically failed to deliver any kind of efficient payments for the last 40 years. Even despite technological advancements in our world, the internet, communications improvements, we can FaceTime, whatever, it still takes 2 to 3 days to send a freaking payment, and it still costs on average 10% to do so across borders, and it's 2024. They failed, and now fintechs, Bitcoin, and stablecoins are coming out with actual solutions, and now they're scrambling because they're like, oh my gosh, we're going to get disrupted by technology just like every other sector, and we're going to create our own like CBDC to try to compete. But I think it's a terrible, terrible idea, and I think ultimately Bitcoin wins, but that's my summary off the top of my head, but we can get into it more. I don't know.
Yeah, I totally agree with your statement. If CBDC would actually exist, we would probably live in very totalitarian regime where there would be no privacy at all, and probably no like property rights. But actually, one friend of my, I am into Bitcoin, but he's not, and I was talking to him about Bitcoin, and he said like, why do you need Bitcoin? Like CBDC will come maybe next year, whatever. And I tried to explain to him that Bitcoin and CBDC is like different side of the coin, like totally different things. But he like does not really understand that. And it seems like mainstream media try to make it look like CBDC is like better than Bitcoin or like something else. What do you think about that?
Yeah, unfortunately, a lot of people just don't understand how bad this can get if somebody has a tool to control the money. It reminds me of a Henry Kissinger quote where it says like, he who controls the money controls the world. And I think people in Canada maybe understand a little better after their bank accounts were seized for no reason at all. But this is even different than that, because this would be the actual money itself that they can shut off. And if everything's digital, like you just go into your phone and then you're like, oh, I can't spend my money. You got to understand, like, that is a critical component to all your freedoms, like the freedom to transact. Like, how would you pay for a bus or gas to leave if you can't have access to your money? I mean, so it restricts your freedom of movement. We speak online and we talk, you have to send mail. Like, it would actually infringe your right to like free speech as well. If you don't have any money, if they can just cancel it whenever you want, you wouldn't have the freedom to just provide for your family. Like, it's really easy to see how the freedom to transact is paramount. It's a pillar of freedom, and it allows you to be more free in other areas of your life. And but to me, like, it's about game theory as well, because they're going to give like little, candy, like a little incentive to adopt the CBDCs. They're going to give a little stimulus check. They're going to be like, hey, you use our new technology, you'll get like $100 free. And like, there's going to be a ton of people that download the wallet and they're like, yeah, I just got this. And it's really fast and it's really cool. But over time, those people are going to understand that the money loses value over time because they're just going to keep printing. That's just going to accelerate over the coming years because of the debt situation. So their value of their CBDCs are still going to fall, just like fiat, whereas Bitcoin's scarce and you can't print any more of it. So anybody who holds Bitcoin, their purchasing power is going to be going up, while anybody who holds CBDCs, they're going to go down. And over a long period of time, that difference in the quality of their lives for Bitcoiners versus CBDC holders, it's going to be hard to ignore. When your neighbor is holding better money than you, can better afford for their family, has 2 cars, is feeling great, and like maybe has a vacation home, and you're stuck in this crappy CBDC and can't afford anything, you're like, wait, maybe I should hold this Bitcoin thing. It looks a little bit better because it has superior monetary policies, and it can be trusted because it's built-in code. You don't have to trust some central banker to not print money into your CBDC and debase it, which is almost a certainty, in my opinion, to happen. And then at the same time, they're going to get surveilled. They're going to get, censored for things. It's going to shut off for different reasons. And Bitcoin has a 99.9% uptime. Nobody can shut it down. It's permissionless. No one is going to tell you when you can and can't transact on it. And people are going to be attracted to those freedoms. And so I think those benefits over time, Bitcoin is just a better technology, monetary technology, a better monetary policy. And over time, people will understand that, and they'll be forced to reckon with, or I guess they will be forced to suffer the consequences of holding weaker money than their, neighbors. And they'll realize that.
Yep. As you said, I think CBDC, as you said earlier, that it would eliminate a lot of jobs, especially in the banking sector. Just imagine your money arriving from central bank straight to your wallet, so there would be no intermediaries. But yeah, it would be very harsh, not only for like humans, but for like many like jobs, basically. But yeah, so you were
Banks.
saying,
Yeah.
so you were
Well,
saying that.
let me clarify a little bit, because like the banks get funded from one of their cheapest sources of funding is bank deposits. So you just give the bank their money and your money, and they can turn around and use that money to make loans. And that's like a really cheap source of funding from them. Now, if you're an individual, when you give money to that bank, like a commercial bank, like a Chase or a Wells Fargo, you're trusting that they're not going to do anything risky with their fractional reserve banking and their lending policies, and that when you want that money back, they're going to have it with you, and they're going to have it and they're going to give it to you. That's counterparty risk, and you're trusting that happens. And sometimes it doesn't work out, and that's when you have bank runs and everyone starts to freak out, like, oh, the bank doesn't have my money. Now, why a CBDC would potentially hurt these banks is because now you would have a CBDC account just like your deposits. And why wouldn't you choose to instead trust a commercial bank? Why wouldn't you trust a central bank instead? Because the central bank can't go bankrupt because they have a money printer. And so there's no real counterparty risk to be had with a CBDC account. And so what would happen is all of those deposits would move from the commercial bank deposits into a CBDC account. And then the banks just lost their largest and cheapest source of funding, which is bank deposits. And so it could potentially crush their profit margins. And and then it could cause bankruptcies across these large banks. And then you have a financial crisis. So the CBDC could suck the funding out of the banks, hurt their profit margins, and cause a financial crisis. But they know this. They know, the American Bankers Association has told them this. They did all the math about how much a CBDC would suck the funding out of their banks and why it's a terrible idea. And they're trying to prevent it by putting like caps on how much people can put into the CBDC accounts. So like, oh, they can only put 3,000 in it or 5,000, because if it was unlimited, then it would just be catastrophic for the banks. But like, you got to understand, like, then you have a money that has like built-in limits and caps from the get-go. Like, how is that helpful if I want to use this as money and I have a $10,000, I don't know, couch I want to buy because I like a fancy couch or something, like, and what do I have to do? I have to wait for my limits. So it actually like hurts its ability to be an efficient payment system. So they're always like toggling this line, because they're like, oh, well, if we don't have limits, then we're going to crush the banks. So that sucks. But if we don't have limits, but if we do have limits, then it hurts our ability to use this as money. So that also sucks. And so the whole thing just like is full of quagmires, and they're trying to out-design all these little things. And you just compare that to Bitcoin, which is just this open, simple, permissionless, like fixed. And you're just like, this is a better designed system from the beginning. And I just think they're going to mess it all up, to be honest with you.
I think RFK Jr. once said that he against CBDC, but moving forward, so yeah, maybe you already answered this question, but why Bitcoin is a solution?
Yeah, I kind of like mentioned, Bitcoin is just a solution to monetary debasement, currency debasement. The ability to hold a money that can't be inflated, or an asset that can't be inflated, that actually protects your property rights in a world where they just continuously manipulate the money supply and try to print their way out of these like debt problems, you have to be able to protect yourself. Now, Bitcoin is the most scarce, actually has an absolute fixed scarcity, which means that the supply doesn't fluctuate with any kind of increased demand. So like if there's increased demand for real estate, they'll build more houses in response to that. If there's increased price in gold, they'll start mining more gold. And so, you don't have that response in Bitcoin because it's fixed. And so that means that it actually has absolute fixed scarcity. And when you are flooding the market with more and more dollar bills because they just keep spending, then the price can appreciate pretty rapidly, and that could actually serve to protect yourself. And, over the long period of time, the ability to save is so important for just our economy and our society. It's something that we've lost along the way. Instead of just saving, we have to put our money to work and basically speculate in financial assets in order to just keep up with the pace of inflation. It shouldn't have to be that way. You should be able to just save in money and decide, I don't want to gamble. I don't want to have to bet on the stock market or the real estate market just in order to protect my money that I earned from my hard work. I want to work, and then I want to be paid in money that actually preserves its value over time that I can just save in. And then why that's important for the economy is because when people have money to save, they start to think more long term. And then they start to invest it based on their personal desires or goals. And that's what you want. You want individuals using their savings to invest in things that have long-term, the possibility to return long-term value for themselves as well as society. And we've lost the ability to save because of their inflationary policies. And it's just this rampant speculation, society that has to speculate because that's just the game. But now if you can actually save, that would lead to more long-term investment. And that's a really good thing for society because that could lead to more innovation, which could lead to more efficient ways to harness energy, which could lead to a higher standard of living, more technological breakthroughs, which compound on themselves. But it kind of starts with the money because it starts with the ability to save. And so that's kind of the long-term view of why I think Bitcoin could actually be, a big solution here to a lot of things.
Yeah, United States is high consumer. People spend a lot, and we have high inflation. But either if you look at the other countries like China or Russia, they do not spend as much as United States, but they still have high inflation.
Yeah, I think that speaks to the complexity of inflation. Inflation is very difficult to measure, just based off one metric, or I think it's very, very silly. The other key component of inflation, of why I think it's a structural inflationary decade, is the underinvestment in energy. So across the globe, when you just look at oil and gas, and this is why when I think of Russia and things, they're one of the biggest oil producers. But when you look at the global supply of oil, it's falling because oil demand keeps increasing, and that's a limited supply, and there hasn't been a lot of investment in fossil fuels or new oil well exploration or anything like that. And when you have oil, if the price of oil goes up, that's going to be inflationary for everybody, especially countries like China that are a huge manufacturer. They're I think they're the second largest source of oil demand in the world. Well, if the price of oil is going way up, that's going to increase their costs across the board, because energy or oil specifically, or gasoline, whatever derivatives of crude, is an input in every single economic activity in the economy, from transportation to manufacturing. It's critical, and so that's just a component of this of why you see inflation kind of rising everywhere. Now, I think that's specific to Russia. I think I talked about the breakdown in trade relations, and then China is interesting because they actually have more stimulative central bank policy in the last 6 months or so. They've really seen a lot of problems in their real estate market. They've seen a lot of problems as foreign investors have really taken money out of it, as there's been more like basically like fascist inclinations from the leadership there. And foreign investors have been taking out their monies in droves. The stock market's been tanking, and there's been a lot of problems with the real estate market. And so what they're doing is the central bank, and they're intervening in the currency markets. They're intervening in the stock markets. They're not talking about stimulus to kind of pump everything into it. So they're going back to like the money printing themselves. And if you look at the amount of debt that China itself has taken on since the pandemic, I mean, it's more than anybody else. I mean, that whole China growth over the last 15 years was really just powered by a crazy amount of debt. And so basically what I'm trying to say is there's inflation there, but there's also large deflationary impulses that they're trying their best to kind of prevent from occurring. And it's one of those things where China is such a black box because you can't really trust the data coming out of it. And so you just kind of know there's potential risks there. And it seems like things are getting kind of shaky over there. So
Right.
that's
Chinese.
I don't know. This is kind of like a sidebar comment, but it's something that I've been looking into the last couple of days, and I'm like, so hard to know exactly what's going on over there. But if you just look at the actions from the central bank and the government and the stock market performance and all these different problems, you're like, this could be kind of a potential contagion risk that could kind of trickle out from outside China to the rest of the global economy. So something to keep an eye on.
Right. Yeah. China's GDP skyrocketed for the past like 25 years. And do you think China's economy is similar to like House of Cards?
Well, I think what they do, when you're a centrally planned economy like China, you can grow fast, right? You can really easily allocate capital where you want it to go, but you're kind of not listening to the free market itself. That's how you get these like giant empty cities of buildings, because you're just building, and that's good for GDP because there's a lot of like infrastructure getting built and it looks good. There's a lot of construction, a lot of, but it's all debt fueled and it's all centrally planned. And then that kind of, it's like a hollow, it's like not sustainable growth because it's all debt fueled. It's all, you're not listening to what that market actually needs. You're just like building things because you're saying build it. And so say it's a house of cards, like it potentially be. They also have like really large demographic issues from their like one child policy. Like there's issues in China, like for sure. House of cards, I don't know. I kind of refrain from saying something like that, but like it's more of a lesson of what happens when you have a huge amount of growth in a short period of time, powered by debt and powered by misallocation of capital because it's centrally planned. And you could see a scenario where that kind of comes to roost a little bit.
Right. Let's move on to US dollar and other currencies. As I know, like prior to 1971, US dollar was backed by gold, and then after 1971, they made a deal with Saudi Arabia to create like petrodollar system. But it seems like now even like China sells treasuries, like petrodollar system is cracking. What do you think is going to happen to US dollar, and what will replace it?
What will happen to the dollar? I don't think it's going away anytime soon, personally. I think there's an incredible amount of demand for the dollar still. I think it's logical to expect countries to begin to price their exports in different currencies, and because of what happened with like basically Russia when the U.S. seized their Treasury Reserve assets, there's a real risk of seizure that these countries have to consider. And if you're an export-driven economy, it's beneficial of you from a risk standpoint to diversify those into different currencies so that you can avoid any kind of knee-jerk reaction sanctions from the United States. If they're going to weaponize the dollar, you have to protect yourself. And I totally understand that from a country, even if I disagree with their policies or their stances on things. It's a natural reaction to protect yourself from that risk, protect your country from the risk of the United States weaponizing the dollar and using sanctions to cut yourself off from the financial system. And so you see that. I think it's, people make a big deal about like, hey, this was priced in yuan for the first time. This was priced in rubles. This was priced in yen. But it's still a very, very small percentage, because like even Russia was like accepting oil in yen, and then they had all this yen, and then they were like, what do we do with this yen? Like, we can't really do anything with it. So like, that's the problem. Like, there's not like liquidity like the dollar. Like the dollar you can use for a lot of different things afterwards after you get it. You also see the rise of BRIC nations and like this idea of like a gold backed currency. Like that's always been like a narrative. I think that's also kind of far away. It would be interesting if anything like that happens. And then you have Bitcoin, which is this thing, right? This like, if these countries were smart, they would start to build out mining infrastructure and have mining pools where they could control, transactions and see their transactions included in the block and then push that through. And it's permissionless monetary system. Nobody can tell you to stop that. And I actually think you're already seeing that right now. I think you're seeing, you don't have like, this isn't public or anything, but you just look at the hash rate. It's been exploding this year. And you look at some research from Galaxy Digital, they think that that's happening mostly abroad. It's not happening as much from like US public miners. That was a lot of the growth rate in 2022. 2023, they think a lot of it came from abroad. It's hard to pinpoint where that's coming from. But there is accounts from ASIC dealers and manufacturers that there's been a ton of buying in Russia. Mm-hmm. Makes sense. Russia is a big oil and gas energy producer. Makes sense for them to use that stranded energy to mine Bitcoin, and then also from like a geopolitical standpoint, mine Bitcoin, not for like the price appreciation, but to have access to a monetary system where they could put their blocks or transactions in the blocks and move it. So I think you're just getting started with this narrative. I think you see some nation state mining from Oman and in Bhutan and in El Salvador, obviously. And I think you're going to see a lot more of that in the coming years as these countries try to protect themselves against the dollar weaponization.
Right, let's circle back a bit. You mentioned BRICS. I know just recently when new president was elected in Argentina, BRICS offered to accept Argentina, but they declined. Why do you think it may or may not work?
Why the BRICS currency wouldn't work?
Right, yep.
Well, I think it goes back to what I said. It's just like really difficult to get appropriate adoption and liquidity. And there is network effects to the dollar. I mean, like what I just said, like the United States could actually punish you for like adopting BRICS. And so like, say you're one of the first countries to say like, I'm going to, adopt the BRICS currency. And then the United States goes, all right, well, you're cut off from our financial system. Like, good luck with that. Like, how many countries are going to take the plunge and be the first ones? And then if it's just like 2 or 3 of them trading amongst themselves, that's not a good liquid system. And that has a much smaller network effect, and you're able to do less, like trade less and all these things, compared to the dollar system. And so like, you would have to have this like mass movement at once to like dump the dollar and go into the BRICS for it to be like successful. Now, could it launch for certain? And I think the monetary policy would be interesting if they back it by a basket of goods or like gold and different things and different fiat currencies. Like theoretically, I would think that would be like a stronger, be able to store its wealth better than just the dollar. Whether it would be better than just like Bitcoin or something, like I doubt it. So, but it's very fascinating to see it play out. I don't pretend to know like how these things play out, but I like thinking about how it might. I guess I'm skeptical.
But do you think, let's say that BRICS currency would be backed by gold, and all those countries that in BRICS would lose ability to print money? Do you think it would be a disadvantage to them?
to actually issue the BRIC currencies?
No, because they're gonna lose ability to print money as they do right now, and then if BRICS backed by gold, they cannot print money anymore. So I think like in the short term, it would be at least quite disadvantage to those countries compared to United States. If United States can like print probably, I don't know, for many decades. What do you think?
Yeah, like it's kind of the funny thing because if you're like an energy producer like Saudi Arabia, or like if you're a main exporter like China or Russia, it's like the U.S. actually is hurt from this system because like we run these massive twin deficits, trade deficits, as well as our fiscal deficits, because we have the reserve currency. And what they're doing is they just like collect money basically from us and then
Yeah.
turn around and buy real assets. And so I feel like they actually are fine with this system continuing. It's an interesting situation because it's like, yeah, it was an exorbitant privilege to be the reserve currency of the world for a while, but then it becomes a hindrance, and then it actually hurts you long term as your entire manufacturing base gets hollowed out, and then it impacts your finances when you look at like your international investment position, net investment position. It's not good. It's not good for the U.S. right now. And then when we buy the goods from China, like I said, they just turn around and now they can just like buy real assets. We just kind of like our export is the dollar, and which isn't like great. So,
Yep.
I guess what I'm saying is like I don't think it's a really good advantage to be able to print money as the reserve currency, and maybe that'll actually prevent these countries from going down this path because they're seeing like actually it's hurting the United States right now. To be the reserve currency in the long run. So like, why not just keep this going and they'll just like basically print themselves into the ground.
Right, but yeah, even though United States printed a lot of money, U.S. dollar is inflated for I don't know since Federal Reserve was created. But it seems like Central American countries, they mostly save in dollars. Even you look at African countries, Turkey, they also prefer dollars over like any other currencies.
Yeah, that's just like a relative thing. So like their
There is a
central
demand for
banks and their
dollars.
governments are even more reckless and more irresponsible than the United States. They're still being debased, but the dollar just being debased at a slower rate. And so they're looking for anything that's more stable. And dollars are that for them. I mean, it's not wrong. Like you look at the Argentine peso. I mean, it's nonsense. It's got like a triple digit inflation rate. You have to find ways to protect yourself. And like the dollar seems very stable to them, very stable. And it is when you compare it to a lot of fiat currencies. But the problem with the dollar is like you still have that risk of slowly losing your purchasing power over time. And that's actually been accelerating that rate. So over a longer period of time, you want to hold it in a money that can't be inflated. But if you want to just have your money in something that holds its value over the short term and it allows you to pay your bills better and things like that, like it's not hard to understand why dollar stablecoin adoption is really high in areas like Lebanon and Turkey and Argentina. They want dollars. But, Bitcoin's always, I always thought it would be adopted from the bottom up. Like, it doesn't have to like compete with the dollar right now. It has to compete with like the Argentine pesos and the lira and like these crappy fiat currencies that, that's who we're competing with right now. And I would say Bitcoin seems extremely stable to those people as well, compared to their currency that just gets inflated or debased, devalued 20% overnight, like what happened in Argentina or in I think it was Ghana, where it was devalued 50% overnight. Like Bitcoin seems pretty stable to those people. So like,
Yeah.
and like you can trust nobody's going to do that in Bitcoin. So that's where I see Bitcoin adoption kind of continuing to gain momentum, is those really, really bad fiat currencies. But the dollar will still it'll be the last one. It's the strongest one. And so I expect that to be the last domino to fall like way down the road.
So basically playing a loser's game. But yeah, let's move on to Bitcoin. Are you keeping? Yeah, I think you are keeping up with like Bitcoin spot ETFs and stuff.
Yeah.
Recently, I think what we have been today's day number 10 for tradings, I believe. And we had a lot of outflows from Grayscale. I think so far like $4.5 billion worth of Bitcoin left at Grayscale. But at the same time, we have a lot of inflow as well. Like combination, I think is over like 5 billion. So far we have net flows like over 1 billion. What do you think is going to happen next, and why Bitcoin dropped like by 20% since Bitcoin spot have been approved?
You know, I think there was a ton of run up and speculation into these launches, and the price rallied pretty hard. And I see this as a pretty healthy pullback. I think there was a lot of hedge funds and traders just trading this event. And they were also playing the GBTC trade, which was there was a significant discount to NAV because of the way it was structured before as a closed-end trust. And if you thought that the ETFs were going to get approved, if you're a hedge fund, if you're a high net worth individual, you just bought GBTC at like a 10% discount, 9% discount, 8%, whatever.
It was as much as 50%.
Yeah, I mean, if you got in like over a year ago, yeah, like 50%, yeah, it's an amazing trade. If you were right about the ETF being approved, you just made an awesome trade. But that's all it was to them, a trade. And so when the discount went to zero, it's not like they were holding on to that GBTC because they were big believers in Bitcoin long term. They, got out of that successful trade, that arbitrage trade, and then that causes a lot of selling pressure. On top of that, GBTC was on a lot of these bankrupt entities' balance sheets over like the last 2 years. The Genesises of the world, the FTX of the world, like a lot of these hedge funds that blew up, like they had GBTC. A lot of these bankruptcy estates were just also waiting for this discount to go to zero, as well as just to they want to return a lot of value to the creditors. They don't want to sell it at a 50% discount. And so they waited for a good time. It spiked up to 49. GBTC was looking good. They're like, all right, we're going to liquidate these holdings, get cash, and then we're going to distribute that cash to if you're an FTX customer still waiting for money, the FTX bankruptcy state sold 22 million shares of GBTC worth like $1 billion. And now they're going to take those proceeds, distribute it to the customers who are still waiting to get their money back from the FTX collapse. And so you have these bankruptcy estates selling. That causes selling pressure. You also see GBTC, their fees 1.5%. So a lot of people are dumping that for cheaper alternatives. Excuse me. With the ETFs that charge like less than 0.5%. So you're seeing this rotation out of these GBTC, all causes selling pressure.
Right. But if I was wondering, let's say we have a net flow $1 billion. Let's say GBTC sold 4.5 billion and positive flow is 5.5 billion. I was wondering, let's say we have plus $1 billion flow. Why Bitcoin still dropped? Because of ETF were priced in. Can you hear me, Sam?
Yeah, sorry.
No worries.
I just have been battling a cold. Sorry about that. Yeah, it's kind of like what I was just saying. It was just seen as like a trade.
Okay.
The ETFs aren't. Sorry, I just have a total itch in my throat.
No worries.
The ETFs aren't the only thing in the market. They're one component of the market, and there's a lot of other trading going on. There's a lot of anticipation around this event. Just because there's billions of dollars of inflows into the ETFs doesn't mean that that's going to translate to a spot Bitcoin price immediately going up. What it shows is there's demand though, and all those the trade that I mentioned with GBTC, the bankruptcy estate selling, those are all one-time events. can only shoot that shot once. But the ETF inflows that we're seeing are pretty steady and pretty substantial. And once you have these on-ramps in place for large institutional investors like financial advisors and endowments, pension funds, to make it easier for them to gain exposure to Bitcoin, that's going to have a big effect for years to come. Like, that's not going to stop. These one-time selling events, they'll eventually stop. Things will hit like an equilibrium there. And then once the on-ramps are in place, we could just continue to see flows. I mean, the demand from these ETFs, even after like 10 days, I mean, they already hold over 100,000 Bitcoin. And that's crazy. That's in like 10 days. And that's like that's almost like a micro strategy at this point. And that demand for such a scarce asset, I mean, it's just crazy to think about, because there's only like 2.3 million Bitcoin available on exchanges. Now, these ETFs buy different ways. Like, they'll buy over the counter. They'll also buy even like directly from miners. They'll source the Bitcoin in different ways, but part of it they'll go to crypto exchanges and they'll try to buy the Bitcoin. And that makes up about 45% of the market depth, which is crypto exchanges. And there's just like not that much Bitcoin there. There's like 2.3 million. And so like, you start to think about like over medium to long term, what these ETFs would represent as like a steady buyer. Now, if there's a huge downturn, it could do the opposite. So I'm not saying that, money can flow out pretty fast too, especially if like people who own the ETF are more speculative in nature. They're not really like believers in Bitcoin. They're just like playing the price. You can actually see it reverse really fast. But I believe that Bitcoin's value proposition will become more and more clear and evident over the next couple of years, and it'll actually just open up the floodgates to a lot of new demand, specifically from institutional investors. But right now, I expected a lot of volatility. I expected the price to kind of fly up, fly down, go sideways, chop around. But over the medium to long term, it's hard not to be really bullish about these ETFs.
Right. As you said, Grayscale has very high asset under management fees, like 1.5%, while like BlackRock, others, they have like only like 20, 30 basis points. Grayscale already lost almost like $4.5 billion, while BlackRock and Bitwise already gained like together almost $4 billion. Do you think like BlackRock or Bitwise will, let's say maybe in the next few months, have more asset under management than Grayscale?
It's certainly possible. I think you'll continue to see Grayscale drop. I think they expected this. I think they knew what they were doing. They said, we expected this amount of outflows. I think that'll stop at some point. And the reason being is a lot of people are moving now because they held GBTC in tax-advantaged accounts like IRAs. You can move in and out of assets without any tax consequences in those. So people aren't waiting around to dump their GBTC and buy one of these cheaper ETFs if they hold it in an IRA or something. But for the people who don't, there's tax consequences for selling, and they don't want to pay those long-term capital gains, especially if they bought it like years ago at a much lower price. And so they'll just kind of eat that 1.5% fee anyway because they don't want to pay the taxes on it. And then a lot of people, to be honest, are just lazy. They just won't even know. They probably don't even know what fee they're paying. Like, right. And maybe Grayscale is looking at that. They're like, I bet there's like at least $6 billion of our AUM that's just lazy and won't sell, which is probably fair. If you ask a lot of people, like, hey, what's the expense ratio on GBTC? They'll be like, what? What are you talking about? There's a fee on this thing? And so I think the Grayscale will have still like a decent amount of AUM for those reasons after the end of all this kind of churn and rotation. But I do think BlackRock and Fidelity and others will continue to see substantial inflows. And I think over the long term, I think they'll attract new inflows because their fees are more competitive, and that it's not hard to think that, probably BlackRock and Fidelity would be my leading bets to surpass Grayscale and AUM. When that happens, I don't know. Could be a year, could be 2 years. But that's logical because I don't see why new inflows would go into Grayscale when you have like large respected firms like BlackRock and Fidelity as options that offer a much cheaper fee.
Right. Also, these spot Bitcoin ETFs, the way they structure that, you can only redeem Bitcoin with cash. Do you think maybe in the next couple of years we're going to have a Bitcoin spot ETF that can be redeemable with Bitcoin?
Yeah, like that's kind of up to the regulators, and so I'm not like holding my breath for that to happen. If you look at what happened in the gold ETF market, you saw competition. Like these different ETFs offer different things. They're trying to differentiate themselves to attract capital. And some of them were like donating the profits to Bitcoin core developers. One, Bitwise just shared their address for transparency. Like, hey, here's where the Bitcoin is. Like things like that is what you're going to see in the gold ETFs. What you saw is certain ETFs started to differentiate themselves by allowing to take physical custody of the underlying. So to take physical custody of the underlying gold. And they charge a little bit of a higher fee, but you would go into that gold ETF because you were like, all right, if I ever want to take actual custody of the gold, I have that functionality in this ETF that doesn't exist with this. Maybe down the road, you'll see similar features with these Bitcoin ETFs where you'll be able to take self-custody of the underlying. Again, that I don't know if regulators are going to be okay with that. Like from what's going on in DC with like Elizabeth Warren trying to attack unhosted wallets and like all this stuff. It's kind of hard for me to believe that would happen right now, but I hope it does because if I was choosing between ETFs, that would be one of the top things. I'd be like, yeah, I would want to, take self-custody whenever I want.
Yep.
Which at that point, it's like, why not just buy Bitcoin? Like there's reasons to buy Bitcoin, not an ETF. Like you don't want to trust anybody. There's no fees with Spot Bitcoin, and you can actually own it yourself. So I'd advise everybody not to buy the ETFs and just buy Bitcoin. But yeah, I could see that function maybe happening if the regulators are okay with it. If you just look at the gold ETFs as a comparison.
Right. Another, I would like your comment. Recently, SEC made a statement to a Coinbase that they're not allowed to rehypothecate Bitcoin, the one they custody for ETF issuers. Do you think all this rehypothecation is going to happen on like a spot Bitcoin ETF level, or it's not going to happen?
Well, they're not like legally allowed to do that. So if they follow the law, then no, I don't expect that to happen. Certainly there could be some kind of, fraudulent activity that they could do something like that, but they can't do that given the way that the trusts are set up under the law. They can't be rehypothecating the Bitcoin or anything like that. So obviously there could be bad actors, these are the kind of risks where that could happen if it was a bunch of bad actors. You're trusting that they're not bad actors when you have somebody else hold your Bitcoin for you, and you don't have to. But under the law, they can't do that. So I'd say the odds are kind of low, really low on that. Yeah.
They're just self-custody, the best way. Anyway, Sam, so we came to the end. Where can people find you online?
Yeah, thanks for having me. Appreciate it. They can find me on X at Sam Calla, SamCallah. I'm the lead market analyst at Swan Bitcoin, which is a Bitcoin financial services company. You can check it out at swan.com. I write a lot of research and market updates. You can find some of my work on the blog there. I think it's at the Learn tab. And if you're interested in buying real Bitcoin, we have a number of different products and services at Swan to help you do that. So check us out.
Yeah, right. I will leave all the links in the description box below. Sam, once again, it was a pleasure talking to you. Thank you so much.
Thanks, Andre. Appreciate it. Have a great day.
Hope you guys enjoyed my conversation with Sam Callahan. You can find him on X as well as on swan.com. If you guys have any questions, shoot me an email or message me on X. Thank you guys for watching.